All right. Yeah, sorry about that, guys. Yeah, it took a minute to get things set up, but I think we're all good to go. I just want to be sure this is on too, and we're all working just fine. Okay, cool. Yeah, looks like we're all set. Awesome. All right. Yeah, I'm not sure what happened there, but we're all good to go now. So, I'm pretty excited. Today we're going to talk about the fixed range volume profile, and this is a tool that I use a lot. You guys have seen it in my technical analysis very often. So we're gonna go over like some use cases for it, where, how to draw it, like in what scenarios can you use it to like get a trade out of it, etc., right? Um, so yeah, without further ado, we'll go ahead and get started. If you guys have questions, please type them in. Ask, as soon as you think of them. I will answer at the end of the stream. And if there are no questions, I won't take any at the end. We're just going to close it out because my goal here is to make these streams a little bit shorter, so they're not like an hour and a half long where people are they're just coming here to learn a little bit about the indicator, right? Yeah, we'll go ahead and get started. So this is fixed range volume pull. What you're going to do is go to your indicators at the top, type in fixed, and you'll go ahead and click fixed range volume profile. Okay, I already have mine here saved to my favorites, so I'll go ahead and click on that. And what you do, you open it and you do 2 clicks, 1 and 2 from left to right. And here we'll go into settings. I just want to be sure you guys have the same sort of setting put in. I put my row size at 100, my value area volume at 70. Extended right I'll use sometimes, and sometimes I won't. Basically what it does is if you have extended right on and you draw it here, it'll just continue to extend. Otherwise, if you don't have it on, it'll stop wherever you pull it to, right? I typically hide the histogram box. I don't think it's necessary to have that. I keep off my developing levels, but I do highlight the point of control of value area low and the value area high. Okay, so that's pretty much it for settings and what I'm looking for. Now, the most simple way I can explain explain this tool here. I'm sure you're all familiar with volume, right? So oftentimes you guys will come down here and you'll look at the volume for each candle. This down here is volume based on time. So we're on a 4-hour time frame. So in this 4-hour candle, we had this much volume. In this next 4-hour candle, we had this much volume. In this next 4-hour candle, we had this much volume, X, and so on and so forth, right? In the case of a volume profile, it gives you volume based on price. So we know at this price, there was this much volume. At this price, there was this much volume. At this price, there was this much volume. And at this price is the most volume, right? Right here. So at about 23,000. In this range here, in our poll, the most amount of volume took place at $23,000. Okay? And this, what this ends up giving us then for the area that we pulled it is it gives us a value area. So a value area is basically where the most amount of trading volume took place for a specific range that you pull. Okay, so for this range, the most volume took place between 22,600 or so and between 23,350. Okay, so this gives us the value area. Okay, this is the value area in here. So right now we can say price is trading inside the value area, right? And we can say up here, price was trading outside of the value area, right? We can see price tried to break out of the value area, and then it came here and fell back in, right? So with the value area, we get 2 other levels as well. We get our value area high. So this is the upper bound of our value area. And then we have the value area low. the lower bound of our value area. So this is our value area low, or otherwise the val, and the value area high, or otherwise the va. And you guys hear me talk about this all the time. I talk about these all the time. And then here we have the point of control, and it's the point of control, the POC, because that is where the most amount of volume in this range took place. Okay, and this is important because it tells us a couple things, right? So if this is the level that the most amount of trading took place, we can expect for this level to be defended, right? So if we're below the level, we would expect it to act as resistance. If we were above the level, we would expect it to act as support. Okay, so we had it act as support here. We fell through, and now it's acting as resistance here, right? And the same can be said for the value area low. We can see that the value area low has acted as support here, 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 and here. It's a pretty key area of support, right? So if price were to come down like this, we would expect then the value area to hold a support. And if it doesn't and it's lost, we would expect price to continue downwards. Okay. Same can be said for the value area high. We had an attempted breakout here, so we would, it was resistance, resistance, resistance. Attempted breakout, failure, broke back down, right? Here we had another breakout, and this time it tried to hold the value area high as support, instead failed to do so, and we fell right back through. So right now, price is trading inside the value area, right? And this can, tell you a handful of things. So like typically what I like to do is I'll draw them based on areas of, in ranges, right? That's why it's called a fixed range volume profile. So you're looking for, typically you would put it in at ranges. And now here's another thing that's pretty interesting. I'm going to go ahead and hide this. And I know you guys have heard me talk about this before. So if we go over here and we're looking at the volume, we can see that still the value area is still at about 23,000, the point of control, I mean. The value area high up here, okay, at about 24,200, the value area low at about 21,250. And so the thing that I want to point out to you guys, what I want to show you is when you see these areas of volume here, right? I like to think of them as shelves. So we have a shelf here and we have a shelf here. But you'll notice there's nothing here, right? Because price just pumped right through. So there was no time for any volume to take place here. Now what that means is that when price does get into this zone, it's going to move very fast. Okay? So we would expect when price were to come down here and it holds a support, if it were to fall, we would expect it to fall straight through and then find support here at the shelf, right? So I want to point that out because it gives you areas of like where you can look and say there's no support in here. So if price were to come through, break through here, it's going to fall until it gets to this volume shelf here, right? And it hits that volume shelf, and then maybe we find some support. All right. Now you don't even need that visual. Okay, you can take that away and you can just go ahead and know. You can just go ahead and know that price would fall through this zone here because there's no volume to take place, right? And then you can go like this. You can start to extend this zone over. And you can say, okay, this area will act as support. If price were to break down, I can expect it to find support in here, right? Because we have a nice volume shelf here. And two, like, when we fall through again, you can look to like the point of control as the area of support or the value area high. What it holds here, or maybe at the value area low. Maybe it does fall all the way through and it hits the value area low and goes from there, right? So this is one way of using it and looking at it. We're gonna take a step back. We're gonna zoom out here. All right. So we just used it on a lower time frame, right? We were looking at like a 30 minute to 4 hour time frame, kind of zone that we could take trades off of locally. Well, the fixed range volume profile can also give you higher time frame levels that are very key, right? So one thing you can do is you can draw them based on market structure, and you can draw them based on time. So we're going to take a look at drawing them based on time first. So here we can say that this is the volume profile for 2021. I drew it from January 1st of 2022, I'm sorry, from January 1st of 2022 to December 31st of 2022, right? So for the whole year, this is the value area. The value area is between 15,500 and 32,800, and the point of control where the most amount of volume took place in the year of 2022 was 16,650, right? That's where the majority of the volume took place, was there. I'm going to go ahead and, oh, yep. So, you know, this can be really important for us, right? In knowing where all of the traders in 2022, right? The majority of them, the volume was done here. The majority of trading volume was done here at this level, right? So we know that this is a really key level and it will be supported. And here we can see that there's a pretty nice volume shelf, right? You know, it kind of extends like from here to here. So we know that this area could act as support, right? We broke above through it. Now, if we were to come back and back test, we could probably expect some, you know, some degree of support in this zone. So here's another way of looking at that. Some people might take a horizontal ray and they'll go over to this level here, right? And they'll put the ray there and they'll refer to it as a high volume node. A high volume node. Okay? And a high volume node is basically, you know, it's where the point of control used to be, or it's just another area that a lot of volume took place, right? So we had a lot of volume down here, but this was also, you know, in this upper range here, this is where the most amount of volume took place. You know, we can test that theory just simply by going like this. And you can see that that's, you know, where the point of control of that range was right on this high volume node. We can go ahead and pull that down so it's a little bit more exact, right? Cool. So, you know, that would be volume based on time. We have a high volume node here, so we can expect this level to act as support. It's a very key level. And then our point of control here. So this is great. This gives us a lot of, you know, important data that we could say, you know, this area would be supported or be acted as resistance. It would be a level that's defended, right, is what we can get out of this. Then another thing you can do is you can draw them based on quarters. So you can do Q1, Q2, Q3, and Q4. And sometimes this can also give you some useful data here, right? So you can say in this quarter of trading, you know, the most amount of volume took place at 16.8. In this quarter of trading, it was 19.8. And in this one, it was, you know, about 30,000. And in Q1 of 2022, the most amount of volume traded was at about 39,000. Right? So this is another way of drawing this out that you can, you know, derive some value from a fixed range volume pull. But, you know, in this case, here's the reason why I don't like the quarters here is if you look, well, there are a lot of ranges that were put in here, and the quarters don't really reflect those ranges. So, like, you know, what would be a better way of drawing this? Let's go ahead and hide our high volume node here. What would be a better way of drawing this? And that would be to, you know, get rid of these. Let's identify the ranges here that we have, right? And I already went through and I drew them out. But as you can see, you know, here's a range. All right, then price fell. Here's another range. Price fell. Here's another one. Price fell. And here's another one. So this is, in my opinion, this would be a better way to use the fixed range volume pull instead of quarterlies. In this case, sometimes quarterlies can be really, really useful. You'll find that the quarterly point of control could act as support as, or resistance, right? But in this case, we're looking at ranges. And I think for this example, it plays out really nicely. So, you know, what we can do then is we can say, well, you know, down here we were in this range. We broke out of that range and we've re-entered. As a matter of fact, we broke even up above this volume range, right? This value area. So we have this value area here. Now, in the case of a dip, right, we could expect, you know, the value area high to maybe act as support, right? Well, and then look what else too. We have our volume shelf here as well. So we can see even when it came up, the value area high was resistance here and price broke through. And now if we were to see that move down, you know, it could possibly act as support. And this could also be a really good indicator for us where if we see price lose the value area high here and backtest it, then maybe we can expect to move down to the point of control, you know, at right about 19.2 to act as support, right? And then if that doesn't hold, then maybe a move down to the value area low, and so on and so forth, right? So this sort of gives us more levels that we can add with as confluence, right, to future trades. And I really like I really like using volume, this fixed range volume profile, because they're not theoretical numbers. Okay, they're not just supposed numbers. And as much as I love Fibonacci, but you know, let's say, you know, you draw your you know, your Fibonacci retracement, and you say, well, you know, this is just a level. It's just a 618 here. Okay, you know, it's just a 618, or it's just a 382, or it's just a 0.5. You know, these are just the levels, you know, that are drawn based on Fibonacci that could suggest that they would act as support or resistance or whatever. Okay, but what makes the volume profile so special is that this is real data. Okay, this is based on the trading that took place in this range. This is the value area. Based on the trading that took place in this range, this is the point of control. This, without a doubt, is where the most amount of volume took place in trading, was at 19,150. Okay, we know that. We know that the most amount of people who positioned here, they were positioned at that level. So if it were to come back down here, we would expect people to defend their position. We would expect this to act as support, right? It's real data. It's that from actual people trading that you can use to analyze and get a better idea of how you want to trade based on that information, right? So for me, this is a really good area of confluence that I like to use in my trades, right? So, you know, let's say this is all very theoretical, but we'll just take a look at it based on what we had just talked about. So, you know, we can kind of go something like this, and like this, and like this, and like this. So price here, say we drop back down into this value area, we hold it as support, we come up, we can expect this area to act as resistance, right? Re-enter this range and maybe trade this range for a while. When we break up above that one, say we do here, and we hold the support, then we would expect to re-enter this range, right? So you can use this as a way to say, like, this zone is a zone of resistance that we can expect when price reaches this zone, that we can expect to trade back in this zone, you know, like we did before, right? So it's range trading. So what do we expect when price re-enters a range and flips the bottom of the range to support? Well, we would expect it to just simply rotate the range. So we can expect trading to happen in here, some trading to happen in here, right? In BTC's attempt to have continuation to the upside, these would be zones that you would look for as resistance in this case. If price were to drop down, you know, we would look to this zone as support. Okay? So that's another way to use it, instead of based on time, based on ranges, right? So this would be another one. If you wanted to go further back, you could draw, you know, the summer of 2021 here, and you can use that as you know, a place to look for added confluence. And if we go ahead and draw the value area high over, we can see that the value area high then almost 1 year later was acting as support. This zone, it worked. It acted as support, right? And if we draw the value area low over, we can see the price actually fell straight through here, right? Price fell straight through and flipped the value area low into resistance, right? We can see that that's what happened here. And this, you know, in knowing that, this would have given you a really great short opportunity, right? And if price regained acceptance back in, that would have given you a good long opportunity. Okay, so it's these things that you can look for with value area to give you that sort of added confluence. And this is, and doing it this way is, like I said, based on market structure rather than based on time. Okay, and I think that this is a really good way of doing it. I personally really like to draw these out like this because it gives you these zones that you can keep an eye on and know that will act as support or resistance. All right. From here, we'll move on to back into like the time aspect, right? We're going to look at monthly. So each of these are, you know, months going back to January. So this is the whole year of January, or the whole year of 2022 up to our current month. So this does another very interesting thing. All right, so each of these months, right, you can look at, and these will give you kind of areas of support and resistance and tell you the trading volume and where all the trading took place for each of those months, right? Like we can see here that the point of control for January of 2023, the month we just closed out, the point of control is at about 20,800, right? So we would expect that if we were to get a move down, that area could act as support, right? The value area low at about 18,800, and we also know that there's a lot of support built up at that level from here, so this area could act as support as well. Now, here's something really cool. I know that you guys have heard me say this many, many times. You'll hear me talk about what's called a naked point of control. All right. And I usually have those based on time. So I'll have a monthly naked point of control, a weekly naked point of control, a daily point of control, or even a session naked point of control. All right. And what those are, and I'm going to show you. So each of these are months. So this is all of January, February, March, April, May, June, July, August, September, so on and so forth. Well, if we look here to see, if we look for, this is actually a really cool example here. So this is a daily time frame, right? This was a naked point of control at this point. We'll go ahead and go back. Let's go to let's go here. So, we're trading back to April of 2022. So we can see here that price closed below the value area here. Okay, and this is May 1st. The month closed below the value area, and we're looking to regain acceptance back to the value area. Well, at this point, because the month is closed, this is a naked point of control, this level here, because price has not traded back up to touch it and then come back down, or break through it or do whatever, right? You would typically expect, in this case, for it to act as resistance, right? Naked point of controls are, similar to daily, weekly, and monthly levels that you draw them, on a horizontal, you draw them horizontally, and you would expect that level to act as support or resistance when price are to reach it. And what's great about this is it can give you, really good, at the very least, day trades, if not swing trades, if you have a good enough degree of confluence there. So we can say, all right, cool. We have April monthly naked point of control here at this level at about 39,600, right? 39,700, about there. Okay. So what we would then expect, if price were to trade up to this level, we would expect it to act as resistance, right? It's a naked point of control because price hasn't tapped it yet. Act as resistance and get some degree of a move down. So if we go ahead and hit play here, look at that. This would have been a great trade. All right. Look at that. Came through, popped up, hit the naked point of control to a T, right? And dropped, right? Perfectly held as resistance. We did not get a closure above that level, right? It held as resistance and we got to move down. How awesome is that? So it's amazing, really, how all that works. So we'll go ahead and we'll look for get rid of that. We'll see if we have any other examples of naked point of controls. No, not one there. Nope. Nope. So we don't have any current monthly naked point of controls that I can point out here. But at some point, each of these were, like when this one closed down here after this month, this was a naked point of control. We can see it acted as resistance for about a day, and then price broke slightly through before then falling back down, right? And you can do this on a weekly or a daily time frame, all right, to identify naked point of controls. You guys see me talk about these all the time. So we'll move on from there. This is just another way that you can use it, right? You can use it to identify naked point of controls. This would be another pull based on time rather than ranges. Okay. Gosh, we'll take a look at this and then we'll go back in. We'll backtrack, but I just want to show you guys more naked point of controls. So we have a naked point of control here, or we did, I should say. This was a daily naked point of control because each of these are dailies. You know, this was Wednesday, Thursday, Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, Monday, so on. Yeah, right. So here we had a naked point of control. Go ahead and draw it over. And we can see, look how important that level has been, right? We got that move down. It bounced off of it here, failed to hold, broke through, retested it, and flipped it to resistance before then continuing down. How important was that level? A daily naked point of control, right? It looks like we have a daily naked point of control here, one that's actually active. That's a real one. We also have one here. So we have two daily naked point of controls right now in this range that I can see here so far, right? And this is our current day. This day is still developing. So if we were to see a move up, we would expect this naked point of control to act as resistance. If we were to break through, then, you know, and somehow work our way all the way back up here, we would expect this naked point of control to act as resistance as well. All right. So let's go ahead and backtrack before we dive into that. I want to go over range trading with the fixed volume profile. So this has been a really nice range, right? We have traded this a lot. And most recently, this has been really cool, right? We had this massive breakout to the upside, hit resistance here, which was a weekly level, as well as our uptrend channel, right? It was two forms of confluence here. We pointed it out in the Discord. And then here, we backtested the 618 zone, flipped it to resistance. If you go down to a lower time frame, you can see how it actually played out. It was really cool. And, you know, then have since had continuation to the downside. And look at this, the channel came back into play. So if you had kept this channel on here and you had watched this, right, where we had a bounce, so we came up and bounced, smaller bounce, smaller bounce, smaller bounce. What's that a sign of? This is a descending triangle, bearish formation, and boom, we fell through. And look where we bounced at the bottom of the range again. So now we're back in the range and simply range trading again. So look how valuable this range has been for trading. You guys know we've had, I mean, what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, now 11 successful, you know, trades off of this channel to be taken. It's you know, it's pretty amazing. So this channel, you can do it based on these levels, but if you really want to dial in a channel, you can also draw your fixed range volume profile, right? So I still like to use it based on price because especially early on, the channel is still developing, right? So the point of control is not going to be as respected, and you can see that here. Price is sort of dancing around through this zone because it's forming the point of control. Then here you can see, oh, okay, now it's really starting to respect it more to the dollar, right? And then now when we get over here, you can see it's really starting to respect it even more again. You know, and that's because this point of control has had time to develop, right? So a fixed range volume profile, if we go ahead and hide this, again, simply you can trade from the value area low to the value area high and repeat, and you know, have a take profit set at the point of control. I still personally like to have a parallel channel drawn because I think you could really clearly see the levels that are respected and draw them out as you want to, because like I said, these fixed range volume profile, these are each little zones, right? Each of these are just little, you know, small zones here. At times they can be respected to the dollar, but more often than not, you're going to see price sort of loosely bounce around it, you know, kind of like we're seeing here. right? But this can just be another added form of confluence to give you an idea of how you should be drawing your range and where you can look to take profit. And that's why it's so important to be taking profit at this midline, because it also falls really nicely with the point of control. So if we were to find any area that was going to bounce or, you know, act as support or resistance, it would be the point of control, right? So it kind of gives us that added bit of confluence, you know, when doing channel trading, right? And identifying channels. And exactly in the same way that, you know, we took a step back here and we just went like this and we said, well, if price revisits here, no problem, then we'll go down here and we will redraw our previous channel, which I actually had set something like this. Go ahead and hide that there. And you can say, actually, I had mine a little bit. I think I said it like this. Yeah, I did. This is how I was trading it. And you can say, all right, cool, we're back in this range. We can expect to just simply trade this range again. Right? So if we were to go over here and price were to, you know, get a move up in here, you know, we would just expect, okay, did this hold? All right, cool. Then we'll just trade the range again until it breaks out. Right? And the you know, the I had this highlighted here. There we go. The value area here can really give us some insight as to where, you know, where we can expect that range to be put in. Okay. Yeah, and we can see here that the point of control was pretty important over on this range here. So yeah, we'll leave it at that with that aspect of the fixed range volume profile. Just a quick, just a small recap. The reason why it's such a great tool is these are not, you know, randomly fabricated numbers, right? This is real data. This is real trading data. The real data shows that in this volume, in this range here, the most amount of trading took place at 19,160, around that zone, right? And here, you know, it was 16,800, give or take, right? So we can identify these zones that we know it was actual traders taking trades, giving us these levels based on that data, so we can use to our advantage. They're not just theoretical numbers, and that's what's so great about them. You can use them for range trading, right? And knowing that we can set it as a range here, and ultimately long the low and long and short the high of the value area, right? Like I said, I personally like to actually draw a channel to give me a little bit more added confluence for like some of these wicks to the upside when it does break out of the value area. And then the last thing that we, you know, covered first was to say you can draw it either on a you can draw it based on market structure like I'm showing here, or you can draw it based on time like per month like I have shown here, or for the year and, you know, quarterly candles, or for quarterlies, I mean, right? These are all great ways of using the fixed range volume profile. Now, the last one that I'm going to cover, and then we're going to we're gonna stop the stream. We'll go to our daily again. We're gonna go down to a 30-minute time frame. So this trading strategy I'm gonna tell you guys about takes place on a 30-minute time frame, and it's called Dalton's 80% rule. All right, and this is a pretty cool trading strategy. So it goes something like this: if price tests the value area high or low within 2 consecutive 30-minute candles, then there's an 80% chance that price will travel through or fill the value area. So I'm going to look for an example here. You know, hopefully we can get one. I thought I did have one here. Yeah, I knew I had one. You know what's cool too? So like, I'll show you this at the end. We're gonna go through EXO charts just briefly. because I know you guys have seen me use that a lot, and all of that data is, you know, it's ultimately from here, or it's similar to this, right? So, no, this one would have been close, but not quite. So we can see here that we had this value area here, and we came up and we tested it here, but we actually rejected. We didn't get the closures that we were looking for. I don't like this one, but this one is, no. Well, I'm going to just explain the theory behind it, and we'll still take a look for some examples, but I just want to explain the theory as to why this works the way that it does. And it becomes such a great trade opportunity because, you know, to fill the value area, you're basically trading from here to here, right? So this is not, this wouldn't be considered the rule, but just to give you an example of why this is how that works. So price breaks out of this value area and it closes the daily outside of that value area, right? Now, if price were to, you know, within the first two 30-minute candles here, were to come back down and close inside of this value area here, there would then be an 80% chance that it's going to fill the value area and go down here. Now, why is that? Well, because this, in doing this, right, this is the value area of this day. And these traders pushed price outside of the value area. They're looking to have price exploration, right, to take new highs, to leave this value area behind and you know, look outside of that, right? This is a great breakout opportunity, okay? If price in the first two 30 minutes, in the two first 30 minutes, if those two consecutive candles come down, close one, okay, we have one 30-minute, and then two, another 30-minute back over here, well, what does that tell us? It tells us that today's traders are not confident in this breakout. We are not confident in that breakout. We don't think it's going to have legs and continue to the upside. You know, and that's what that signals. So for price to come back down here and close one 30-minute candle and a second consecutive 30-minute candle inside the previous day's value area. Okay, well, that's a great short opportunity. We would take a short here and we would take profit at the point of control and trade it down to the value area low, because this signals that today's traders are not confident in yesterday's breakout. That's what that signals. Okay. And you know, I don't necessarily have a perfect example here, but you know, I mean, this value area was actually very important because you can see that, you know, price basically broke back down inside here, you know, and it became very weak. And you know, this sort of price action here dancing inside of this value area, this value area here is a sign of weakness that says, you know, okay, yeah, we're probably going to go visit the bottom. We did just that, right? We visited the value area low and now we're actually trading below it. All right. God, I would really love to find a great example of this. I know I drew one out for you guys, but it would have been great to have an example for you. Well, I'm gonna keep using this one as an example because we have it here. So we're just gonna do a replay, and we're gonna go back to here. Okay, and we're going to hide these, and we're just gonna go like this. Okay, so I'm just gonna show you guys some examples. I'll draw them out myself, so that we can, you know, continue on. It's kind of a bummer. I wish I actually had an example here. I thought I did have one in this range. So again, the very first one that we covered, if it tests the value area high in this case, right, because it wasn't a breakdown, it was a break to the upside. if it tests the value area high within the 2 consecutive 30-minute candles. So the daily close just happened, right? This was the daily close, and now we see a massive dump, and price is here, and it tested on that 30-minute candle, and then the second 30-minute candle, it comes down and tests it. Well, according to Dalton's 80% rule, we would then expect a move to fill the value area. Okay? If price comes down and tests it on the first 30-minute candle, but then we have a massive bounce and we're trading up here throughout the day, and before the daily close, it comes back down and it tests it for a 30-minute candle again, and then a second consecutive one again, 2 30-minute candles in a row, it tests the value area high. Dalton's 80% rule says we are going to fill the value area of that day, right? So it tests it in the first 30-minute candle and then 2 consecutive 30-minute candles later in the day. That would be 80% rule. We're going to go down through. All right. If it's similar to this one, but let's say if the market opens, so like say we broke out like this and we come back down and the market opens down here. Here, I'll go ahead and delete this. This is similar to that last one, but if price were to break out and then before the daily, or on the first 30-minute candle, if we were to come in and we were to open the daily down here, right? Open the new daily down here inside the value area for 2 consecutive 30-minute candles, 1 and 2, break out, and then test it 1, 2 on 2 30-minute candles, then there's an 80% chance it'll fill. This one's a little bit more complicated. Honestly, this is the one that you're really going to want to keep an eye on. And then even number 2. I think 1 and 2 are, in my opinion, the 2 key ones that you keep an eye on. And it's called Dalton's 80% rule because if you see any of these scenarios happen, there's an 80% chance, according to a study, an 80% chance that the value area will then be filled. So this is a really, really great way to trade. So like a lot of times that I end up trading this, I actually just use it to invalidate my other trades. So chances are, like, let's say I took a, I'm actually just curious. Let's see if I can. Yeah, okay. So this is a great example. I took we're channel trading, right? I'm going to go ahead and hide these to make things a little bit more visible. So I'm channel trading, and I've longed the bottom of the channel. I took profit at the midline, and I took profit at the top, but I still have my runner. Remember, we take 50% profit at the midline, 25% here. I still have 25% open. Okay? And I'm waiting, and price breaks out like this. It breaks out of the value area high. All right, it breaks out. If that happens, I'm thinking, gosh, I have 25% still running. This is great. You know, I'm going to continue to hold this, and we'll see how high I can trade it up to. Well, then, all of a sudden, I see price come down in the first, and that daily open in the first 2 30 minutes, I see 1, 2 consecutive 30-minute tests of that, and then price does something like this. Well, at this point, I'm thinking to myself, well, that's Dalton's 80% rule. We did 2 consecutive tests of the value area high. There's an 80% chance that we're going to trade back down to, 22,900. So I'm actually going to close my long here. I'm going to close the 25% of my long, and I can choose to short it, but if I don't, I can just simply watch price go back down, and I can be happy that I took profit here. Oftentimes, that's how I end up using this. I don't often trade it, but it gives me it assures me on whether or not a breakout is real or false, right? If this breakout were to come up here and hold and not backtest that, then yeah, we can expect to go higher, right? Because it shows that today's traders are confident in this breakout. They're willing to long in this zone because they think price is going to go higher. If price comes down, well, that says today's traders are not confident in this breakout. It's more likely that we come back down and revisit the value area high, because if they're not confident in today's breakout, who's going to be buying higher? Right? That's the thought process. All right. So I think I'm gonna cut it off there. Again, I apologize. I thought that I had a Dalton's 80% rule example here live, but I'm glad at the very least we did have this breakout here, and I can, draw the 3 examples out for you guys, um, to trade off of. And two, by the way, we were doing this with dailies. You could also do this with sessions. So I know we talked about taking a look at exo charts. We'll do that very briefly. So you know how I have all of these. I drew the fixed range volume profile for each day. So, Wednesday, Thursday, Friday, Saturday, Sunday, and then this gives us the naked point of controls like we talked about. Well, I have all that data here on exo charts. So that's exactly what we're looking at. Is this is the 2nd, this is February 3rd, 4th, 5th, so on and so forth. Each of these are days, and these are the fixed range volume profiles of each of the days. This is the point of control. We have the value area low here and the value area high here. I get all of that data just right here, right? And this is a naked point of control, just like what we said, 23,800, just like we had pointed out on our chart here. And go ahead and hide all this. We'll go ahead and pull it up. We said that we had a naked daily point of control, and that was what's going on here. Oh, of course. I have to close out my replay. We had that, daily naked point of control at, 23,800 right here, just like we had talked about earlier. Well, in TradingView, I can go over here and I can see, yep, we have a daily naked point of control at 23,800, right? So I get all of that data just in here, right? Pretty easy. The next, the thing I did want to show you guys though was sessions, right? So that rule can also be used with sessions. All right, so this is New York, this is London, Asia, this is closed. London, or I'm sorry, New York, London, Asia, closed, so on and so forth, right? So these are market sessions, and right now we're trading in New York session. Dalton's 80% rule can also be applied to market sessions rather than doing daily sessions like we were looking at before. Okay, so it's just one more thing I want to add just so you can, take a look at if you choose to. You don't just have to use this rule in terms of dailies, right, like how we have set here, but you can also use it in terms of market sessions. All right. So that's it. We'll sort of end it there. The takeaways here are using a fixed range volume profile for drawing your your ranges, right? Using it for market structure, you can draw them based on time. You can use them to identify daily, weekly, and monthly naked point of controls that can act as a magnet for price for future price action and give you at the very least some kind of a day trade, if not a swing trade off of, if there's the right degree of confluence. And you can also use it in terms of Dalton's 80% rule to not only for a trade setup, but to also give you an idea if something is a real or a fake kind of a breakout, right? Giving you that idea there if that's the case. Like this was great, right? So we had the daily close outside of this value area. We came back and back tested it as resistance, and here this is actually the because we didn't test it on the first 30-minute candle. If we had done that, then we would say this is Dalton's 80% rule. We can expect it out, but we didn't do that, right? So in this case, because we closed down here and we didn't back test it within the first 2 30-minute candles of the day, instead we came up here and pumped through it, or pumped to it, I should say, right, to the value area low here, we would say, well, it's probably more likely that it acts as resistance, right? Because we've traded most of the day without revisiting it, and we didn't do it in the first 2 30-minute candles, right? So we can expect it to act as resistance and say, all right, this is a great short. Versus if we had gone up there and tested it in the first 2 30 minutes, came down, and then did this, we would say, well, it's likely we revisit the highs. So it can give you a sense of whether or not on the day we get a real or a false breakout, and it can help inform your trades as well. So we'll go ahead and cut it out there. Let's see. I'm just looking at some of the questions. Yeah, so I'm just gonna. I don't think there's anything too specific here in terms of questions. So here's what I'm gonna say. We're gonna close this out today. We did a tutorial on the fixed range volume profile, a super important tool. In the future, I think with these live streams, I'm gonna do a lot more education focused live streams, and for example, like later today, I will be releasing a market update. So I know a lot of you are looking and waiting for that. So later today, you can expect a Monday market update from me. But with these live streams, I think a lot of them I am going to start focusing on more education based stuff too. Just as an extra value rather than doing essentially 2 market updates a day. So we'll cut it off there, guys. I hope you enjoyed it. I will be in the Discord if you guys have any questions either about this stream. Like I said, stay tuned for my market update, my Monday market update coming out a little bit later. And other than that, I'll be active in the Discord all week. So if you guys have any questions or comments, just let me know. Enjoy the rest of your day, guys, and we'll see you around.